design, the design of the V, guys. It's very, very important. This is one of the key confirmations that I use every single time. Every single time I need to see this confirmation before I even execute a trade. It's very, very crucial. But before I get started, guys, I just want to quickly say like, subscribe, and get ready to share. Share the video, right? Like, share, subscribe especially, and comment, bruv. If I ask a question, please feel free to like drop a comment in it. That would be really, really nice, you know what I'm saying? Because I get the outski so more people can watch this content. Yes, sir. Wagwan with the geezers of Wall Street. If you're watching this video, you're actually a fully well confirmed geezer of Wall Street. Welcome, Spartan. Anyway, let's get started, guys. So the thing that I really want to focus on is what I call the V design. Okay, and I would actually draw it out first, but you know what? What I'm gonna do is I'm gonna go straight to the charts, and you guys are gonna have to really, really pay attention to what I'm gonna talk about. Now, let's take a look at Euro Yen from this area here, where the mouse is. This market is in an uptrend at the moment. Okay, so the most recent break that happened was this break here. So that's the most recent break that happened to the upside, and then the market came, pulled back, went up again slowly because of bad price. So when you see a market going up slowly like this, that signifies bad price, that the market is not happy with the price that has been given. Now, the market then goes lower and lower and lower, and then we get that V design. This here is the V design. Now, which candle was the previous candle that did the previous break? So when I say which candle is the previous candle that did the previous break, is which candle managed to push this market to go make a lower low at this level here. And it's not this candle, because when this candle came, it went back up a little bit. It's actually this candle here. So that area here becomes a very important area of supply. It becomes an area of supply. Okay. Now, when the V recovery comes in, right, I'm going to draw it out here, guys, real quickly. When a V recovery comes in, okay, it has to come back in 100% back to that candle that is responsible of the drop that made the lower low. So it has to come back to the area of supply. Basically, in this situation, it has to come back to that area of supply, because it's not just a candle, it's also an area of supply. Now, this is what happened on Euro Yen. It came down and then it went back up to that area of supply. And how many candles did he take? It took 1, 2, 3 candles. It took 3 candles, and it went back up and it recovered. That shows a sign of recovery in that market. So let's say you got fundamentals in your favor of Euro Yen, showing that Euro Yen is positive. The euro at the moment, okay, I'll talk what's going on right now. Okay, there is high demand for the euro, right? Because of the global recovery, because of the vaccination rollouts, because of the reopening of the Europe, right? So it's the recovery trade. There's been a high demand for euro. JPY, if you look at the CFTC, there's been high net shorts of JPY. They've been increasing. Net shorts of the JPY have been increasing very, very quickly, a lot of the times. And also because the BOJ is still, in Japan, they still have high cases. They still have a slow vaccination rollout. And also another thing is they're still very, very much accommodative. There's no signs of there's no signs of easing off on the Japanese yen side. Okay, let's put that aside. So we've got Euro Yen. There's been a demand. We've got a strong currency versus a weak currency. Now, when this V recovery comes in and you've got your fundamentals on your side, this is a very powerful V. Because watch what happens next. This is what happens next after that V recovery. So it did a V recovery, and then we had that little range, right? So that range, that sideways move that happens, right? That kind of little sideways move that happens, right? That sideways move is very, very important, and you need that to happen. Why am I saying it's very, very important? is because that sideways move signifies that the area, okay, the area of supply here is not as strong as it was before, which means the sellers that were at that area of supply are no longer there. So when the market starts going sideways, it just shows that the sellers can't go and make a new lower low. And if you look at the size of this recovery that came in, you can clearly see that the buyers of this market are active again. So when you in this range here, in this little range here, this is where you execute your trades. Okay, so this is what I normally do. So I'll go long and I'll put it here. So put it here. Let me see. Okay, long. Okay, let's take a look here. And because I'm a swing trader, 39 pips doesn't really hurt me. So I'll put my stop loss below the V area, because if the market then comes back and retests that V design, and it comes and goes below that V design, that only signifies that, right, the market is not happy with that price. That literally just signifies that it's going to go further down for a bit. So I'll put my stop loss below that V, and then I'll just hold it, depending on, like, for example, with my fundamentals and all sorts, I can just hold it. So there you've got your 1:2.57 as well. Another area where you could put your stop loss is literally here, because we actually do have an area of demand here, right? So that area of demand here, you can put your stop loss below that area here, and the trade can just take off, and you get 1:3.55. Okay, so that's for Euro Yen. Look for another example. Let's take a look at Euro USD. I want to look at another example. Take a look at Euro USD. Euro USD again. This is what I'm talking about. The V recovery, the V design is very important. So this is the previous candle that did the previous lower low. Okay, if that confuses you, hit me in the comments. So this is the previous candle that did the previous lower low, and when it done that, the V came back in aggressively, the buyers, which means that they were satisfied with that price. So they came back, and then now we've got this little mini range here that formed. Now, again, I'm going to have to re-explain this so it can actually click into your head proper. Do you get it? Right. So this area here, that candle is responsible of this down move. It's responsible for that down move. That area there, prices around that area, is responsible of that down move. Okay. Now that area has become an area of supply. Okay. There's a lot of sellers in that level. Now the range, right? It didn't come lower. Why did it not come lower? Because the sellers that were at that area of supply have been kicked out by these strong buyers that came in with the V recovery. So that signifies no sellers. That range signifies that the sellers that did this are not going to do this again. So you can enter your trade for buyers. So this is the current market that's happening at the moment, and this is a very good example. It's a very, very good example because it's very, very current. So my stop loss would actually be here, below this pivot point. Okay, there's a pivot point below the pivot point. The pivot points are areas of supply and demand, or area of support. So I'll put it below this pivot point here, and yeah, so here you can see the trade is currently 1:3, and I'll be aiming for these R3, R4 areas here, because I'm a swing trader. I hold trades for quite a while. So yeah, that's the V recovery. Okay, now let's take a look at a market that's been crashing, so I can do an example for the sell side. I'm gonna take a look at Aussie GBP. No, I can't think of a market. Aussie Swiss franc. I can't think of a market that's been crashing recently. No, that's not a good market. Euro pound is actually a good one. Take a look at Euro pound. Okay, so Euro pound is also another good example here. So we had this candle that came up, it pulled back, and then it came up again, and then now it started coming down slowly, right? And then the buyers came back in, and then we had that V design again. This V design is a little bit complicated because you're going to be like, right, it's not fully 100% because, you know, if it's 100%, you would have to cover this area here. It would have to come back to this area here. However, that happened here. So it happened here. So this V recovery came back in to this area here, and then it literally just went shtoom. So this is more like an extended V. Okay, so this is the move, upside move, and then this is the whole kind of the V design coming back in, showing that the sellers are back. So right now we're currently having like a retest in the market. So a retest in the market is probably, so you'll be looking to see the trade come back to this area here. Okay, so you can hit the sells to the R3 level, mainly the R3 level for me. For me to execute a sell in this trade, I'll need the trade to come back to the R3 level. So that's an example for the sell side. I'm trying to think of another market that's in a short. Guys, comment below. Tell me a market that's in the shorts that's been selling off pretty aggressively. I mean, Euro Pound has been selling off quite a few times, but yeah, exactly. So we can try this example here as well. So here we had that area here of buyers here. So that's the demand area here. So what I was explaining before with the buy side, so remember that that's kind of reversal for the sell side. So we've got the area here of buyers, and then from that we had this we can say lopsided, we can say extended. So it extended all the way down. But we can say this area here, it kind of extended to this level here, meaning that this is 100%. This is a 100% movement here. It's actually a 100% movement. And then we had this short, brief sideways move. We had this short, brief sideways move, and then the market extended and went lower. Okay, so it's the same thing. It's the same concept. This is a very good confirmation for your entries. It's a very good confirmation if you've done your research. Okay, so tell me how you find this. Do you think this is a powerful method or is it not? Let me know in the comments. So that's me done for the video, guys. Yeah, I just wanted to share this little tip. That's the purpose of this channel. Thank you. Bye.